Hello traders, the title of the video is price action, the whole price action, nothing but the price action. Alright, so I hope you like the title of this video today. We're going to discuss the price action, and I would like to encourage you to stay with us and to watch the full length of this tutorial so you may understand everything. If you are a beginner or a new technical trader, you will probably be using the stochastic, the RSI, the CCI, the moving averages, and the Bollinger Band. Nothing wrong with that. It's a learning process. All right. At one point, then you will start using, Elliott wave, and then you will start using fractals, talking about Fibonacci, market geometry, and so on. I remember when I started trading first, like everybody else, I was using MACD, and that's what I was using most of the time. I was using MACD for day trading on a 3-minute time frame. But after a while, one particular day, I remember clearly, I was looking at the price and I said to myself, I hope I can only look at the chart, at the price action, and use the price action alone to make a decision. All right? I was also thinking, though I have that expectation, I was thinking that it was not possible to use the price action alone, nothing but the price action alone, the whole price action alone. I was not even thinking that it was possible to use the price action alone, all right, to buy or sell in the financial market, until I come across what they call predictive fractal pattern. Now some traders may say, here we go, the same story, blah 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 blah. If you are an experienced trader and you are saying that, it means that you have to open a YouTube channel and start sharing the experience that you have, which means you have passed the stage of learning. You are now quite, if you know already about the fractal and everything, it means that you are now fully fledged qualified. So it's like somebody who has a master's degree but still stay in the classroom with other students. So that's what's happening sometimes. So we are speaking to a wide range of audiences. Sometimes some experienced traders, they watch our video just because of something that we may say that can help their training. Doesn't mean that they need every information in a video, but just one thing that will help them, to move a little bit or to improve their trading. So that's why I'm encouraging even as advanced traders to stay with us if they want to and watch the full length of this tutorial, So you may say to me, Joe, you say the price action, the whole price action, nothing but the price action. Why do you still have moving averages on your chart? So as I've been saying to traders, apart from the price action, the secondary, technical indicator that we can use, is the moving average. Why? Because if you are in a management, the management use statistics. So when they are talking about statistics, they are using averages. So they are talking about quant trading. They are talking about algorithmic trading. They use moving averages. The statistics, talking about statistics, we are using averages. They are powerful trading tool apart from the price. All right. So some traders, just to let you know, some traders even today, though we all use candlestick bar, there are traders out there still using the line charts. So you see the price action here. You see the price action here. Blah 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 blah. Look what the moving average 20 did. It just went like this and start going around like this. When some traders see that, they just buy because they are still using the line chart. All right, that's what's going on. So we want to understand. So that's why, because apart from the price action, the moving averages are the secondary tool that we can use. That's why I have them there. Let's remove them for now, to please everybody. So it's the whole chart, nothing but the price action alone. Look at that beautiful, gorgeous chart without any blah 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 blah. Okay? So now look at this chart and tell me what you can see. Should you buy or should you sell? How can you interpret just the price action? If you are new trader, stick with us, because even if you are still using your technical indicators, you want to watch this video because it will stay in your mind, and one day it will help you to move to the next step. Don't say that this is not for me. Watch it, please. Alright? What can you see here? Alright? Price went down and then pull back, then went down, then pull back, then it went up again, it's pulled back. So we can deduct that when the price goes out, it doesn't go up forever. It can pull back at one point. That will be something that we can deduct from that information. The next thing that we can say is that how is this particular stock, this is, about my pronunciation, is it correct? Albemarle. Am I speaking French or should I use my American accent? Albemarle Corporated. Is that correct in American accent? Oh, right, let me know. Okay, so the EPIC is Alpha Lima Bravo. Okay, belonging to the basic material sector. So again, stay with me watching the price action. All right. So when we are talking about the price action alone, we can use, all right, measuring sticks. So one of the measuring tools that I'll use is Fibonacci. I'll just use Fibonacci retracement. So I'm going to choose it from here instead of here, because there are many support here. So I will ignore this low here. I use it here, low, 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 right? And then we put it here. So we are analyzing this stock here, all right? So it went up from 1996 to this point. That's the significant high. And when it was coming down, it came down to the 78% Fibonacci retracement level. Don't forget that. So it's a major event. Any significant low, any significant high, any key pivot level, all right, is a major event for that financial instrument. You need to note it down. So the first trending file, the correction that we have, brought the price to 78% Fibonacci retracement level. The market analysts know that. They say last season the correction was 78%. Last season the correction was 61.8% level. Last season the correction was 50%. Last season the correction was shallow. It was 38.2% level. So for this stock, we noted down 78% retracement. Why? Because of the price action. It's something that is related to this stock after a trending fell. The correction that we have is 78% level. We need to know. Why do we need to know? Because in the future, we want to have a reference point. What is likely to happen after a move up? So here it is 2009, and when now it starts coming down, analysts will say, last time was 78% level. You will advise people and say, watch the 78% level, this level here. So from here to here, we apply again the price action, and we'll be telling people it can, doesn't mean that definitely you come there, but it can go here. Why? Because last time it went to that level. So you see, with that information alone, we gather that information. So as the price is coming down, so crossing the 38.2% level, if it did below the 50% level, you'll be saying that, all right, next level 61.8% level, next level 78% level. But as soon as it goes below the 38.2% level, we start thinking that, all right, there's room for this stock, all right, to go down more. Yes or no? So we are working with the data that we have collected before. So I'm speaking to you like you are trading robo or trading algorithm or something like that. That's what's going on in the financial market. And you'll be amazed. This is exactly why a lot of technical traders are struggling today, because the way the trading robot, the trading software are thinking has changed. With the computers now, they can do a lot of verification very fast. Past retracement, 78.6%. Now, look at this one. is 61.8% level. So the prior retracement was 78. The second one was a little bit lower. So what can we deduct? We can say that, all right, if it start going up again, before we have 78, now it stopped at 61.8% level, couldn't reach the previous target level. Now here it is. So you are here now. Okay? You are here. What kind of projection will you make using the price action alone? So you say to people that the deepest, so you speak with your beautiful market analyst accent, the deepest retracement that we had the last time was at 78.6% Fibonacci retracement level. And that level today is at a $66 level. All right, so you will say something like that, okay? So after this move from here to here, using the price action alone, you make a projection that the deepest retracement that you see for this stock last time was, okay, 78%. So you say to people to watch that level. Will you? Yes, you will. All right. Then you say, after the 78.6% level, the stock did not retrace to the 78.6% level. But the second time, it did stop at 61.8% level. So you'll be saying, all right, watch also the 61.8% level. But then you will be very careful now. Look at this. The price action alone. You'll be saying to people, there is a kind of tendency for this stock. Anytime you retrace deeper, the next retracement is a little bit shallow. But because this one was at a 61.8% level, we need to be careful when it reaches the 50% level. Will you see that? That's what the investors are doing here. The price action alone. So this stock has a tendency after, see, the retracement was deep, the second one was a little bit shallow, and now again, so 78, 61.8, all right, now where we are, 50%. If it goes up again, pull back, what kind of projection you will make? You'll be highlighting first the 38.2% level, yes or no, and then you drop 50%, 61.8%, and telling people that the deepest retracement is 78.6% level. Now, will you agree with me that with the price action alone, we can make a lot of forecasts like this just using statistics? That's why I was talking to you about the moving averages that represent a statistic, 50%, 100%. So we have hundreds candlestick bar, right? So you may say it's not statistics, it's not percentage, it's a number of candlestick bar, but it represents something, a data, a specific data that we can work with. When 20 goes above, the 50 is telling us something. There's a change. When the 50 goes above the 100, it's not the same thing when the 20 goes below the 100. All right? Again, let's continue with the price action, the whole price action, nothing but the price action, to see what we can do. Again, this is what's happening all the time, looking at the price action alone. Traders saw here. Are you with me? We are not using any technical indicator at all. Just the price action. So traders saw here. Look what the stock did. After this trending phase, it formed here a kind of inverted head and shoulder chart pattern. Did you see that? Here we have again the head, the left hand side shoulder, the right hand side shoulder. Because of the sharp move here, we didn't have the right hand side shoulder, but can I show you that traders pay attention, call this move as an inverted head and shoulder pattern. This is the head, this is the right hand side shoulder. The left hand side shoulder is hidden somewhere here. Alright? Alright? Again, you see here, it comes down very sharp like this section here. We can say that probably, unless it goes like this and go down more, okay, if it comes down more, then we see this the left hand side shoulder, then we'll call something here as a head. But if it goes up like this, we see probably the left hand side shoulder here, and there is a possibility that the stock may go up a little bit, and then again form a right hand side shoulder before we try to go up again because of the previous price action. So all we are doing, we're just looking at the chart, gather some information, and try to work with that information. Something that has happened in the past, We gather those information and we are working with it. So what we are talking about the quant trading, the algorithmic trading, all this trading robot, all this trading software, all they are doing, they are gathering information. That's why we recommend to try to have enough data. Look at this beautiful data that we got here. Since 1995, we have a data here. Isn't it good? Suppose we were only looking at this session from 2009. It's not enough data. We can gather so much information. But all the hedge funds are using trading software, trading algorithms that are gathering information relating to the S&P 500, the Nasdaq 100, and the price going fast. But because before the price reaches those levels, there were orders already placed there. There were forecasts, there were expectations relating to the past data using what? The price action, the whole price action, nothing but the price action alone. If you are using the stochastic 833, all right? The stochastic 833 is deriving from the price, yes or no? If you are using moving average 20, it's deriving from the price. If you are using RSI 12, 18, or whatever, it's deriving from the data of the price. The price is the number one indicator. The price action is the number one indicator. We use technical indicator to smooth the price and to determine, okay, to have a bit of idea what is likely to take place. For instance, to highlight divergences, bullish divergence, bearish divergences, all right, leading divergences, all right, to forecast the market, all right. But with the price action alone, we can do a lot of things. So as I was telling you about the inverted head and shoulder chart pattern, look at that. So to the neckline, all right, using the price action alone, traders are making decisions with the price action alone. So the reason why I'm doing this exercise, so I'm not putting it all the way to the low, I'm using a conservative measurement like this, all right? A lot of traders are going round, looking for formulas, which is okay. But there are, look at that, there's a target here, so measuring the depth of that. Look, you can see what has happened here, okay? There's a target there, all right? All right, you see here, you went almost to the target. We want to hit the target. Here it is, start to go to the target again. There's a target there. He braced above the target. What he did? Look at that target. He retested that target there. The price action. Now you understand why the market decided to pull back here. So you may say, why is he pulling back? It should go up. Yeah, it should go up. I want to retest this one first. Then when it go above that, the price action, you see, that measuring stick, and they go like this. Those traders will go like this. Alright? And they move, they say, okay, target there. Again, he brace above target. Look at that. He return the target. Using what? The whole price action, nothing by the price action alone. Boom. Now it goes above it. Now they move the goal post here. Now again we have, okay, this is what we call a bearish engulfment candlestick bar. A bearish candlestick bar engulfing a bullish candlestick bar. Trailer is kaput. Yeah, that's why they are selling here. Alright. Now the key level that we have below are still valid. So you see the projection that we did before with the Fibonacci retracement using the price action alone. Alright, you see now? So another group of traders will also use this one here. So here, so they say, okay, I don't want to use the previous one, I'll use the new one. So they say, this is a head and shoulder that is hidden a bit. So they say, all right, we have a new neckline here. And they start projection like this. Again, almost there, you see? Same target, almost. Break above, retest. Goes above, they done it again. Yeah, that's what we are again. You see? So we can look at what has happened before to have a bit of idea what is likely to take place. But I have a warning for new trader, for beginners, is that do not do this on the 5 minutes, on the 3-minute time frame. I'm not saying that sometimes it may not work, but it won't be very solid as you can see here on the monthly chart, because it takes 30 days for one candlestick bar on this chart to be formed. So the data that we have on the monthly chart is quite solid. All right. So we can play with the price action alone, gathering information like that, using the price action alone, using the whole price action alone, nothing but the price action alone to make a trading and investing decision. So go with it, play with it. There are more that we can do with the price action. But today, I want to leave it as it is so you don't get too overwhelmed with the information I'm providing. I will be recording other tutorial about the price action, and I will be analyzing different financial instruments so you may have a bit of idea what is happening, showing different examples. That's why sometimes some traders who are not YouTube creators do not understand. Sometimes they think that we are repeating ourselves. Is that you open a topic, you are not going to talk about it one day, yeah? The topic, you're going to expand it, and you're going to show not one example, you may show, for instance, 1 or 10 examples. Another example will be similar to the other example, but there will be a little bit of change. So you are talking about the same thing, but you are showing different examples, not the same financial instrument. And when you are looking at a financial instrument as a YouTube creator, you are first analyzing that stock. So somebody that is trading that stock will find it useful. Somebody that is not trading may say, I'm not interested. But again, the subject that you are studying may interest that person, though that person is not trading that stock. So say, well, I'm interested in price action trading. So that person will stay with you. Other traders may say, Joe, you talked about price action before. Why are you talking about price action again? And I say, well, that's my YouTube channel. I can talk about anything I like. If you are an advanced YouTube creator, YouTube technical trader, it means that it's time for you also to open a YouTube channel and start talking to people about what you know. But the point I'm making here is not to discourage trading, but to explain myself to trading why sometimes video may look like it's a repetition. Yes, but it's a different example relating to a specific financial instrument or expanding a topic or similar topic with a little bit of change, highlighting something that is a little bit different. So if you do not watch the full length for the video, you just watch maybe the first 10 minutes, you may say that, oh, the same thing again. Sometimes I watch videos on other channel. I think I am number one YouTuber because I subscribe to many channels. In fact, I don't unsubscribe that much. No, I don't think I don't unsubscribe. I like the channel. I give the person a chance to carry on. So what I'm saying to you is that sometimes the person may be talking about something, all right? I watch some video and I say, okay, that's not for me. So maybe I watch 5 minutes, I go away. That's not for me. But I'm not going to get emotional about it and say, oh, he's repeating himself, blah, blah, blah. But he's not repeating himself. Maybe he's talking to somebody. So I say, that's not for me. I click away, all right? That's it. So we are allowed to do that on YouTube. Or sometimes I may be curious, so I move the video forward, fast forward, and then I notice that the guy is talking about something very interesting. It happened to me sometimes. This is a true story. This is in bracket. We can talk about it now. Is that sometimes you move the cursor like this, you move the video, fast forward the video, and then you watch it through the end, okay? And then what's happened? You go back to the beginning. Now it becomes interesting to you because you watch it from the middle. Now you want to know the whole story. So you go back to the beginning and now you watch it from the beginning to the end or to the point where you did start. So those are the things happening on YouTube. It's a big platform, excellent platform to share information. So sometimes as a YouTube creator, we need to speak to you like this so trader can understand what's going through the mind of George. All right. So we can all move together and make this platform a great platform. Enough of my blah 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 today. It's good to talk, my friend. So this will conclude our discussion today about price action. The whole price action, nothing but a price action. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, just mark it down. Okay? If you think that this is an essential tutorial that can help other price action traders, feel free to share it with your friend on Tumblr, Google+, Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel today. It's free. And click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about price action, the whole price action, nothing but a price action. Happy trading to you all, and I will speak to you soon. Thank you for watching. The financial instrument that we are analyzing today is Marble Corporated Epic ALB. Is my pronunciation correct? Let me know in the comment section.